Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk about our Forex headliner, which is going to be your U.S. dollar, Japanese yen, Bank of Japan announcements tonight. It's a big deal because we're expecting a rate hike, the first one in quite some time, and I'm going to go through the sort of the historic behavior of the BoJ and show you just how exceptional a rate hike would be today if we get it. We're going to be looking at all things yen. We're going to be looking at the Nikkei, the Great Britain pound, Japanese yen, USD, Japanese yen. We're also going to look at crude oil and the trade of the day that I put out for the Australian dollar, US dollar. And I'm also stocking a scalp right this minute. And this is going to be the real money account right here. This is going to be a real money trade if, in fact, we do get our entry point, which is going to be a 29 sell. 29 sells up there on WTI crude oil. That's going to be the March contract. Now, the reason why we're making this trade, you can see right here, this is a 1-minute chart. This is typically my go-to during the intraday. I always watch the 30-minute to understand market state, but I also go to the 1-minute to see exactly what's happening in the short term. The reason why we would make this trade is, number one, we've got a daily level coming into play right there. That's our daily 13-period moving average, which is up there at 75.32. That, to me, is going to be an absolutely huge level. Now, yesterday, it was a beautiful buy. We were buying 36s all day long. It worked very, very well. Today, sort of the opposite. We had Trump come on earlier today. He talked a little bit about the way forward to the World Economic Forum, the WEF, and it was an aggressive type of an engagement. He called a lot of people out, called Bank of America out, called the Saudis out for oil prices. And we saw a big-time bearish move. So in my opinion, I mean, the bear market has started. There's no denying that. Going back to last Thursday, you've seen a tremendous sell-off from 79 down to 75. The question is where do we go from here? We had an inventory number that came in that was interesting. It was a it was a draw on supply, which sent prices, brought bids to the market. So my trade is very simple. We got a moving average right there at 75.32. I go down to my 30-minute chart. I take a look at market state. What's the market doing? Right here is when Trump was speaking, talking to the World Economic Forum. We've also got another short-term moving average in there. My Fibonacci's relatively beautiful, really a beautiful wave. Nice high up there at 76, nice low there at 74.39. So right in this area, it should be some serious resistance. Now, if there isn't, we're just going to cut and run. We're not going to get married to this trade. This is an intraday scalp. I've got 2 lots on. So my first lot, I'm looking for about 5 points. The second one, I'm going to let roll, and I'm going to call that on the fly. That could be anywhere from 8 to 10. If they give us the money straight away, then we're just going to take it. I may just take 2 off at 5. I don't really know yet. I got to wait and see exactly what price does. This is tick scalping. It's very difficult, and it's not for everybody. I've been doing this for a long, long time, and I can tell you that I know my personality very well. And if, in fact, we do get an opportunity to sell right up in my kill zone, the magic number's 32. I'm shading that 3 points because I want to be aggressive. We're in a rotational type of an environment. We're down about 0.5%, so the sentiment is slightly negative, but we're in a flat market rotation. We saw the same thing out of gold today, which has really sort of been a dud the last 2 days. I haven't had a futures trade in gold the last 2 days. So right up in here, this is where I'm expecting the sellers to step in if we get this high, and I want to be very aggressive. I want to try to take a shot at some of that easy money, and I think that if we get good trade location, I don't know that we're going to get it during this stream, but that would be my late day play. I'm looking at that, and then I'll also buy 74 48s. We absolutely nailed this, and that's sort of a retracement sequence on a macro time frame. That was a beautiful trade. That's why we're up a couple $100 on the day. Not really happy with this week, though. Been very, very slow. I haven't enjoyed it. It's been a lot of waiting and too much. Really just we should have expected this. I should have really been out front. I don't say should have often because I don't like looking back too much. But this week, if you're trading to the profitability this week, and I'm just above scratch. I got up a couple $100 on today's trades, but I'm not really feeling very good about where we're at just because the transition of power in the United States is really shaking things up, and I don't particularly care for how rocky the markets are right now. They will even out, but I have to tell you, it's probably going to take a couple more weeks. I mean, Trump is dropping bombs on the market every few hours, and it's a good thing for us. If we know our technicals, we can trade our technicals, but I'm telling you right now, the fundamentals are changing by the hour. So well, here you go. Here's your big sell-off here. I'm in WTI, so we're down to about 98. Now, what makes me really like this situation even more is I got asked a question about ranges. Shane, what you were talking about daily ranges. Well, basically what I use is an average daily range, but I've adapted it to be a periodic range. And I use 13 periods, and I take an average of those 13 periods, and that's my baseline value for how far I think a price bar is going to go and how far I think, say, a daily, a weekly, a monthly is going to go. So right now, I've got an ADR of about 40, So what are we looking at here? Well, our low on this price bar is right around 97. So what's 40 plus 97? Let's say that's the bottom. Somewhere around what? I don't know. What is 40 plus 97? 37-ish? Where's 37-ish? That puts us right in our kill zone. So if we get this trade the next 30 minutes, I'm very confident that it's going to pay us off. Unless we get a big rush of action in the market, then we'll lose. And that's part of life. Not very likely right now, though. Okay, so remember, if you need a place to trade WTI crude and all your favorite Forex pairs and the BoJ announcements this evening, check out Switch Markets. They've got a little bit of something for everyone. CFD products, Forex pairs, crypto, you name it. We were waiting for a bigger move out of crypto today. We're only up about 2.3%. We wanted Trump to really jam home the idea of a crypto reserve, and it just didn't quite happen in that WEF meeting. So always be aware. It's another factor we have to really take into account is what's Trump saying on any given day, because it makes a difference. Believe me, I take it from my experience. I covered the first administration as a financial writer, and I will tell you firsthand that these statements, a tweet, he was really controlling a lot of stock prices with his tweets. We've got to be very, very careful, understand when Trump talks, because it's going to shake the markets. We saw WTI crude plunge when he addressed Saudi Arabia today. Interesting stuff. So good to see everybody back. Team Marine, always a pleasure. Bobby Bob, a lot has been said by Trump. How soon will it start? It's already, Bobby Bob, it's already being reflected. The biggest thing that I would point out is this right here. This is prima facie evidence. This 30-minute bar in WTI crude is when he was talking today, but we can refine this even more. Okay, this is beautiful. We're selling off down to about 89. That's going to be perfect if, in fact, we rally up and get a shot. But it looks like the sellers are taking over in crude. But take a look at this. This right here, 9:13 a.m. Eastern time, 11:13 a.m. 9:13 a.m. my time, 11:13 a.m. Eastern. That bar right there, some statements towards Saudi Arabia and getting the oil prices down, crashed crude oil by 1% in a minute. That's a huge range bar. And look at the participation, about 10,500 contracts changed hands in 1 minute. So you will see these statements. Anything that surprises the market is going to be a big deal. And Trump has a way of surprising everybody almost every day. So be ready, buckle up, get ready for it. Looks like we're going to miss our trade, though. We're down to about 87. If we rally from here, then we'll get a real nice scalp here on the live stream, but I don't see it happening. We also want to buy 48s, but we're right into no man's land. So we'll do the best we can. In any case, here's a trade follow-up. Here's a trade idea that we put out earlier today. It's been a pretty good year for these trade ideas thus far. Believe me, we will lose eventually. That's just the way of it. But this is a real nice trade, and I don't know that this one's going to lose. Australian dollar, U.S. dollar. Now, remember, the BoJ is going to dominate everything, and I mean everything, to do with the Japanese yen and the Nikkei tonight. Australian dollar may not be a bad place to look for a trade. Now, this is a trade idea that's sort of a macro. You can see that it's a real macro level. We're up there a ways. We're playing a monthly retracement zone, but I really like these. These monthlies, my weeklies and monthlies are fairly accurate. I really like them. And then also you've got a chance to play off a key number, which we'll talk about in just a second. So anytime we get a chance to play a macro number on a short time frame, it really does give us a great chance to win. And right there's our 38%. 38% retracement is at 64.40. I get this question a lot. This is the most current and practical way of drawing a Fibonacci retracement, and it's very simple. You go right up here to the most recent spike high or swing high, and you connect that right to the most current swing low or swing, yeah, and there it is, your spike low or swing low, and then right there, 64.38. That's going to be 64.40 is the exact number, but 38-ish. That's going to be our sell. Now, when I put this trade idea out, we were quite a ways off of it, but look how fast the Aussie's moving north. Right at now, we're right around 63, so we're only about 138 pips up there. I think that we'll have an opportunity potentially to make this play. in the not too distant future. So there's your 1 minute chart on the Aussie. You can see we've really taken off here and moved up significantly here, about 15 pips in the last few minutes. If that continues, then we'll get a shot at our sell. So I'm very excited about that. So that's the trade idea for today. Just a quick touch base on our performance metrics here. They've been pretty good. You'll notice that there's the latest one. We haven't lost yet in January, so that's not too bad. We still have a few trades that look to me like they're going to get washed out. The Aussie CAD hasn't quite come into play. We're really waiting on that one. That's one that I really liked. And then the U.S. NFP dominates market sentiment. You can see that we're still waiting for a pullback in the U.S. 30, and it doesn't look like that's going to happen. I think we're going to run those all-time highs again. So that's going to be a challenge, but definitely one of those things that we need to be aware of as we roll deeper into Q1. Let me see Dragon. Hello, Shane. The markets are indeed volatile. Even the Tokyo trade, the Piranha isn't working. Yeah, you got to put the Piranha away when it's volatile, Dragon. You got to be. There's a couple ways you can use the Piranha, and it's built for flat markets. We want flat markets if we're trading the Piranha. If we're trending, if we see a lot of whipsaw action, get away from the Piranha. Get away from the Piranha. It's not a good situation. It can get you hurt really bad, because if in fact the market's doing this, and that's evident by those Bollinger Bands being wider, then you could really run into issues. Now, there's a time and a place to trade it. If I was trading the Piranha, I would be doing it probably in the afternoon here in the United States when things are sort of really calm and you're just expecting that rotation. But you have to get enough action out of it. And I was watching the Euro this morning when Trump was talking, and it just plunged. So let me see. T. Marine, okay, for the Fibonacci retrace, how are you deciding which time frame to do? Yeah, bread and butter for me is going to be the 30-minute chart, but you can use it on any time frame. I love the 30-minute chart during the U.S. session, and then also during, if I'm using Forex pairs, a 4-hour chart's a pretty darn good place to start. So those things, but you could take it all the way down to a 5-minute or a 1-minute. If you're going to trade a 1-minute chart on anything, it's just got to be really volatile. You have to have a decent range to work with, and that'll really sort of put you in the money. Let me see. You used monthly time frame for Fib, but why not weekly? Well, it's a good question, T. Marina, and I'll tell you why. Because you don't have a clean market. And what I mean by that is, well, this is clean. This is a nice spike high. Let's just draw it one more time to show you. This is how you would draw it. This is how you this would be the most. This is how I draw Fibonacci retracements, and probably the most current and accurate way that'll keep you in the market on really the most recent type of price action. The most recent swing high to the most recent swing low. That would be your sell. And then if you wanted to buy, it would be the most recent swing low to the most recent swing low, and that would be your buy. That's it. Now, the question would be, why didn't I use this on a weekly? Well, take a look at the weekly market structure. It's not good enough. And what I mean by not good enough, you'll notice all these spikes. Right there's a spike high. Right there's another spike high. And more importantly, right there's a spike high. So the weekly price action's disjointed. What you're seeing here is more of just a chaotic sort of vibration of price as opposed to a wave count. What I want is a nice clean pocket. That's what NFL quarterbacks want. They want a clean pocket to step up and throw the ball. I want something clean. Now, anybody here can see this downtrend. Anybody here can do it. And the way that a lot of folks draw Fibonacci's is they say, there's the move, high, low, Fibonacci, bam, I'm good. I don't like to do that. I like to stay as current as possible. As current as possible. So what would I do? You say, Shane, you're using a monthly chart. Yes, I am. But look what my monthly shows me. It gets me out of that dirty price action with all the spikes and what I call just a real ugly type of a scenario. I want it clean. I want it pretty. And that's what I'm looking for right there out of a Fibonacci. You can do that on 5-minute charts. You just got to make sure the market's moving enough to make it worth your while. I know on a monthly chart that we've got plenty of room down here to cash our ticket. So that's why I passed on the weekly time frame there. And the daily's even uglier. If you take a look at it, what do you have here? This is sort of indicative of what happened on the weekly. It's ugly. I mean, you almost have a Bollinger W right there, actually. That would have been your bid, but you got stopped. But something like this, it's too hard. It's whipsaw. So when I back off to the view from 10,000 feet, now we're cooking with Crisco. You know what I mean? We're cooking with gas right there. We got a shot. We got a shot to really locate something right up around 64.50. I like that short. Check it out. We were very aggressive with this trade entry because I don't want to miss it. But this one was one that we've got on the board for right now. I think we're going to get it too. I really do. I think we'll have an opportunity. Nice clean trend. Absolutely, Team Marina. All right, let's go ahead and get on to the task at hand today. It's all about the BoJ. We're going to talk a little bit about the news. Tuesday through Thursday, pedal to the metal, trade it. trade it and trade it hard, trade your plan, figure out what you want to get out of the markets and go get it. This is the 72 hours to do it right in the middle of the week. News of the day, big news day. I'm not going to get too caught up in a lot of these because these numbers don't matter. They really don't. But let's take a look. Right there, continuing jobless claims were up just a share. That means nothing. Initial jobless claims, 223,000. That's above 221 and 217. That is sort of a big deal. That shows that there's an uptick in initial jobless claims. That means that more folks are going to the unemployment lines. Typically, that's a recessionary indicator. That's something the Fed's watching very closely. Our NFP number coming out here in a couple of weeks for February is going to be an interesting one. All right, crude oil inventories are the other key market event here. Negative 1.017 million barrels. Not quite as bad as expected and not as bad as last week, but you can see all these numbers here. I don't really put much stock in them. You could say gasoline inventories are important, but that's more of a retail market. I'm not going to dig too deep into that as how that really impacts pricing. But what we do know is this: when crude oil shares and stocks go down, supply goes down, price goes up. And that sort of fueled a bit of the bounce after Trump came out and said what he said. He crashed the market. The market's rebounded since then. We are clearly in a rotational phase here for WTI crude oil, waiting for something to happen. These inventories numbers are going to become more and more important. I would say give them another 6 weeks. There's executive orders being signed all the time. All of it's designed, many of which are designed, not all of them, but many of which are designed to open up the energy. That's a priority, an absolutely priority. But you got to watch it. You got to watch these executive orders and the timing. We just don't know, and they all move the market. So U.S. commercial crude oil inventories, excluding those, decreased by 1 million barrels at 411.7. We're 6% below the 5-year average. That is unbelievable to be in the dead of winter. There's a major oil shortage problem here developing. I expect the Trump administration to get out, and they're going to drill, and they're going to get as much oil to market as they possibly can. I'm looking for a bearish type of a sell-off here. I don't know that we get it this month. We've only got about another week. Give this situation 3 or 4 weeks. These numbers are going to start changing. And when they start changing, you're going to see crude oil prices come down. How much? I don't know. But I think your long-term average is going to be somewhere around 60 for the next 4 years. Of course, if you have a war or something, then everything's out the window. So something to think about there if you're trading crude. But that was the reason why we rebounded. Just a quick recap on our crude chart. I mean, you see right here, we went way low. 30-minute chart. You can see exactly where the market crashed. Bang. And then what happened? Inventories came out. You got to build back, and now we're trending lower. So it looks like we're not going to get our 29 sell, which is depressing, but that's okay. That's just sort of trading. They pay us to wait, not to trade. That's why when you get a decent opportunity to make a trade and you wait and you put all the time and the information and the effort and the research into it, and you don't make the trade, you really let yourself down. You've got to make sure that when your trades come across the board, you trade them, especially if it's Tuesday, Wednesday, Thursday. You've got to do it. Remember, don't hesitate. Once you've done the work and you're ready to go, don't hesitate. Just trade. All right, the BoJ to raise interest rates. This is the story of the day. There's no question about it. We've got some interesting pairs here to look at. What you've got here is the BoJ expected to raise interest rates by a 1/4 point. This is fascinating stuff. It doesn't happen very often. That's the 10-year chart. That's the 10-year chart for the BoJ. They cut rates into negative territory in 2016 and didn't move them. Did not move them. They were already in negative territory for COVID, so the policy moves did not occur like they did in the Western world, where everybody slashed interest rates just to try to support economic prowess and avoid a major catastrophe. So that's what you're looking at there. Now, what can we really say about where we're going from here? Well, I mean, we started raising interest rates here into positive territory. That was big news. I mean, that was big news from the BoJ. And then we went up another 1/4, and now we're talking about going up another 1/4. So what does that mean for the yen? Well, it means it's going to strengthen. I mean, it really is going to strengthen. You can see right here, Great Britain, pound, Japanese yen. We put this type of analysis out there the other day. I felt like it was really strong from the Great Britain, pound, Japanese yen. I probably should have put it out as a trade idea, but that's okay. Our trade of the week has to do with the U.S. dollar, Japanese yen. And if, in fact, the Bank of Japan doesn't cut or doesn't raise interest rates tonight, that trade may actually come into play. Expect a big bullish bump if they don't raise interest rates. Now, right now, you're trading at an interesting level, a fascinating level for the Great Britain pound Japanese yen. You'll notice 38% retracement was right up there at 192.98. And if you want to go to your daily's right here, what have you got? beautiful stuff if you're scalping. Right there, your high was 193.01. I love it when these things, when they line up with the key level, you're in great shape. So you're up there, you're right around 193, you're feeling pretty good. That short came into play and your low was 192.28. Compliments to the chef. 70 plus pips, in, out, done. That's a great trade. That's one of those that I really like. Now the thing has changed. Things have changed now. We have to say, okay, what can happen? Well, if the BoJ raises interest rates, then you might have an intermediate term top locked in. You may actually see the yen trade down and challenge that swing low we established on the 17th of January. Okay, that's one way. The other thing is if they come off more dovish than we expect, if they don't raise interest rates and there's a surprise to the market that way, then your bullish break will be on. So as far as I'm concerned, this Great Britain pound Japanese yen trade, we missed it. We missed it. And is that unfortunate? Yeah, that's sort of unfortunate because that was a real strong trade. However, I don't necessarily believe that we missed out on too much. There's going to be plenty more. There's going to be plenty more where that came from. So just be ready. Be ready. I think we're going to have an opportunity here to trade these pairs relatively soon. I just want to see what the BoJ does first. And here it is right here. Policy, BoJ to raise policy rate to 0.5%. That's as high as it's been since October of 2008 before the global financial crisis. This is a big deal tonight. If you're trading the yen, if you're trading the Nikkei, if you're trading during the Asia-Pacific session, be ready for this. This is big. This is a big deal. So if, in fact, we're interested in trading, sort of the suite of products, I always recommend focusing on a suite of products, especially when you have a big market driver. What else could we trade that's out of the Asia-Pacific session? Well, the Nikkei. We could definitely trade the Nikkei. We've already covered the Aussie. Expect a little turbulence out of the Aussie if the BoJ does something. It will shake for the Forex pairs, especially those that are in that Asia-Pacific region. So be ready for that. Now, the other thing we can do is trade the Nikkei. Now, the Nikkei has been great, really, since I started streaming, and it's funny how fast the years click by. But right in here, this is really when we were getting started evaluating the Nikkei, and I sort of outlined that 27 level, or 25 was really nice compression throughout a majority of 2022, and then you just got your break, and now it's just Elliott wave time. It's boom, a big move, a pullback, another move, and you're sort of still in bullish territory, but take a look at what happened in August. Now, this is exactly why a lot of traders don't make money in the markets and, in fact, lose a lot of money, and it's because you get things like this. That was BoJ intervention right there. Brought down the yen, absolutely gained a lot of steam. And what happened? The Nikkei crashed and then it rebounded. So right now we're still trading relatively near those levels. If in fact you get a rate hike, you're going to want to buy the Nikkei, but you're going to want to buy it after a retracement. So it would look, your long-term anchor points would look something like this. 36.6, something like that. If you wanted to be more aggressive, you could do something like this where you look at the weekly, but I don't recommend that just because it's so choppy. That's what I call a picket fence. Spike high, spike low, spike high, spike low, spike high. You don't want to do that. You don't want to do that. So what I would recommend right now is be very, very careful with the Nikkei. You could definitely get some sort of big-time correction. Just out of curiosity, though, I do want to dial this down to a daily, and I want to take a look at one of the most traditional crossover technicals that there is. So we'll go ahead. We'll go here. Okay, this is going to be our 9 EMA. It's not really overly traditional, but what is traditional is our 5200. So I want to go ahead. I want to take a look at that Nikkei one more time, and I want to put just a basic golden cross analysis on it. Something like this. I want to go to my daily. Okay, what we want to do here, turn that off. This is just a quick way of working these indicators on TradingView right there. We want to go down to moving average. Now, these are going to be simple moving averages. We're going to put 2 on there. We're going to go 50 and 200. Remember, the settings are 50 and 200. Simple moving average on the daily. That's what a lot of equities traders use, and they use it to really judge trend strength, but not just trend strength, to really make investment decisions. And so what we're looking for here, you can see that we need that 200. 200 is going to be your long-term trend. This is one of the most traditional forms of technical analysis there is, the 5200 crossover. All right. Where was your daily crossover? Right there, the 50 crossed over the 200, so you're still bullish. You're still very bullish here. If you're involved in the Nikkei, what I would recommend is if you're holding longs, be ready. Be ready for anything. I know we have some traders down in that region. Be very careful. be very careful because this can easily pull back. If I was interested in trading the Nikkei, I would be on the sidelines. I wouldn't be holding any positions. But this formation right here, you've got a nice big, what do you got, about a 5-day run there, 4-day big bullish run. I would be looking at that 50 real close, 39 even. You could easily get an 800-point crash on a very hawkish BoJ. A lot going on there. That's not a bad entry, though. 39, maybe 30, 39, 250, something like that. Get a nice shade. A lot of people are going to be looking to buy this, and you definitely could be doing it right after the interest rate decision. Something to think about there. Let me see. Oh, the range? Yeah, range. Yeah, we'll talk about range eventually, T. Marine. I got to figure out how to present it without violating my confidentiality or my non-disclosures that I signed. So I got to make sure that I present the concept without really showing any of my secret sauce. Nothing personal. I would share it, but maybe we'll get to a point where the NDAs don't matter anymore. I don't know, though. We will see on that. In any case, right here, nice, good weekly formation on the dollar yen. Do you want to be long or short the yen? You want to be out of it. Now, we nailed this trade. We nailed this one. This was one of the first ones that came across the board for us last year, this year. But you'll notice that our 38% is money. That 155 zone, that's been fantastic support. So if you wanted to, after the BoJ talks, if you wanted to buy that area again, you could. Just understand it's high risk. And if, in fact, that zone breaks, get out. Get out, because we could see a big-time correction, especially if the BoJ is hawkish. Let's say they raise a quarter and they say more hikes are coming. Anything can happen in this pair. You'll see the Japanese yen rally. Now, if we're dovish, if the BoJ backs off rates and backs off the verbiage, which I think they're going to do a little bit, I'm still skeptical you're going to get that rate hike. I really am. If you don't get it, then our trade ID, our 159.75 sells. Those are going to come into play. I know it's 300-something points up there. I go, yeah, I know, but it can happen fast, especially if the BoJ does things that are unprecedented. That's for sure. So be very, very careful with that if in fact you're trading the dollar yen. But that would be my schematics. Downside support is robust, right around 155, and then you've got a situation here up here right in front of that 160 area, which is a long term. Well, I mean, essentially it's an order block. You can see this doji that formed back in July. What it is they would say, if you're an institutional trader or an SMC smart money person, then you would look at that and say, well, that's a pretty good order block right there. That's going to be a supply zone. Maybe it is, maybe it isn't. But I do know this: when we go to our monthly. When you go to your monthly, you can see you've got sort of your highs right up here at 161.87, and that 160 is a big deal because it's a big round number, as was shown by that weekly doji. So be very careful here if you're trading the dollar yen this evening, if you're in the United States, or maybe it's going to be your morning, or maybe it'll be your overnight. It's just very, very difficult to say exactly where everybody is in the world. All right, I think that that's a pretty good look and recap of the yen and the Nikkei. As far as what else to really look for today? I'm going to go ahead and just throw some gold technicals up here, and then we'll call it. But the breakout is on for gold, but it's been tricky. It's been hard. You'll notice right there was our inside month. We said, well, once we break out of either the top side or the downside, you're going to see a bit of a move, and you are seeing it, but it's stubborn and it's clumsy, and there's sellers. It seems like everywhere we go, there's sellers here, really trying to keep a lid on this gold market. Today, here's a good look at your intraday price action. Going back to about 6:30 a.m. my time, 8:30 Eastern, and you see right there's your big run-up. So how would I be looking to trade this late in the day? Well, I mean, you could go right from this spike low. I mean, this is the U.S. session, essentially. Something like that could be very good. You get a pullback to 27.50. That's not a bad scalp at all. The problem is you're 60 points away from it, or you're about $6 away from it. So the odds of actually getting that later today aren't good. They really aren't good. So you got to watch that relatively closely, but you do have a convergence of indicators there. Now, as far as what I will recommend with gold in general, I always like the 4-hour chart because it gives you a good look at exactly what the macro picture is, sort of from a swing trading perspective. And you'll notice there was your pullback, there's your break. So the last 4 hours, we have seen gold break. Why? I think a lot of it was because nobody knew what the heck Trump was going to say, and everybody was sort of sitting on their hands and wanted to manage risk. So remember, the biggest number in your gold market right now is going to be what? It's going to be your all-time high. Your all-time high is up there at 27.63.67. So keep a close eye on that. We see WTI crude selling off, coming back down to that 74.50 zone. That's fascinating to me. Very, very interesting. Very interesting. We've got the negative. We just didn't quite get our sell up there. That would have been pretty. That would have been that would have made my day. I got to tell you, that would have made my day. But it looks like we're going to trend a little bit lower to close up the trading session. All right, we've got a big video out tomorrow that if you guys are interested in the power of AI and what AI can help you do, you need to check the video out. In the video, I show you how to use AI and ChatGPT to code PineScript. And the way that the three things that we did, we focused on our 920 strategy. And the basic indicator was to shade in the area between the 9 and the 20. That's your trend indicator. When that's big, it means your market's trending. And when that shaded area gets real narrow, it means the market's flat. It's a quick visual way to judge trend strength. I get asked that probably 3 or 4 times a week. And then we also put in a sell indicator and a buy indicator. The sell indicator is the first purple bar after a crossover, and the buy indicator is the first gold bar, or excuse me, the first bar after a crossover, and those are colored gold. Very easy way to look at the market and say, yeah, I've got my 920 crossover, and I know that A, we're trending strong or we're not. B, when to sell. C, when to buy. That video is going to drop tomorrow on our How to Trade YouTube channel, so go ahead and check that out, How to Trade Calm YouTube. It's a pretty good video. It took a lot of time to do, and I show you exactly how to use ChatGPT to code it. So that's for PineScript. That's for TradingView. If you're on MT4 and MT5, we may be doing a video like this in the future. So be sure to check that out if, in fact, you're interested in AI. If you're interested in AI. All right, everybody, I'm going to go ahead and sign off for right now. It's been an interesting session, that's for darn sure. We've got potentially a crude oil trade coming my way. I think I'm going to be bidding 47s here in a minute, which I have no problem doing. We're in complete rotation, and that's pretty much the bottom of this intermediate term range. Let me see. NFLX, Brian Barbie, good to see you. Let me see. NFLX. All right, let's do one more. NFLX, Netflix. Yeah, I mean, there it is, 30-minute gap up, and now you're retracing. So let's go to a daily. See, the coding works. The coding works right there. So what do we have here on a daily? Love it. I already love what I'm seeing. Great suggestion, T Marina. We've got a gap. God, I love gaps. Gaps are awesome. That's a true gap, too. I like to have at least a 60 or a 90-day gap or a void where price hasn't been traded. Where is our gap right here? Traded that in December. Our gap is going to be right there from 23 to 50. Love it. 25 to 50. Remember this. There's a couple rules of trading. Gaps get filled, and gaps get filled. Gaps get filled. I would look for that gap to be filled. So, if you're trading a CFD on Netflix, you could consider a short here. If not, wait for a buy. Wait for a pullback and a gap fill, and then potentially you could go long for maybe 940 something. Could be a pretty darn good trade. Not bad. All right, everybody, I'm going to go ahead and sign off. Fantastic stuff. I want to thank you for joining me today. We'll get a trade one of these days live. It's just always tough to time it because I don't know where the heck the market's going. And you guys know me. I'm pretty patient when it comes to my levels, but when they come into play, they perform. All right, everybody. That's a wrap for me. Have a fantastic trading session. I'll be back tomorrow. We're going to talk about the opening range breakout strategy, which is the video that we put out last week. I think that it's going to be a pretty good strategy. A lot of people are interested in it, so be sure to check it out. Bobby Bob, good to see you always. You guys have a fantastic session. Mark Corp, you as well. Team Marina, thank you. Brian Barbie, good to see you. All right, guys. Trade the action well, and we'll talk soon. See you.